Today we'll be talking about H&M in our first ever episode of the company case study series. The case studies are brought to you by the Asia Report, where we're dedicated to helping you learn the habits and success patterns of the best investors in the world to help you make more informed investment decisions so that you can shape your own financial freedom. Do remember to check us out at theasiareport.com, and the link is right down there. So today we're going to be talking about H&M, a brand which needs very little introduction. They're the business of fashion and fast retailing, as they call it. And even though H&M owns a couple of different brands these days as they try to branch out from the core branding of H&M, the main brand, is still where most of the revenues and profits are generated from. Now, H&M is actually from Sweden, and they started out in Sweden before embarking on their global expansion phase. And that's why we're going to tell you the first part of the story, which is really the story of market expansion. So as I mentioned before, H&M was really a regional player at one point of time. They started expanding outwards into Europe, and after the great financial crisis, they really started the entire global expansion plan. And it was really very common. It was not uncommon to see headlines like that. Crazy long queues welcome the second store H&M. In the first store, their flagship store in Orchard Road, people were queuing up throughout the night just to get a chance to buy clothes from H&M, which was something that was quite startling to me because at that point of time, I was actually based out of Europe. So H&M was a very common thing. It's not really something that people would queue up for. But in Singapore, in Hong Kong, when they were rolling out for the first time, this was quite a new thing because you were taking this whole idea of cheap, enjoyable, fashionable clothes at very reasonable prices back then, and this was something that was quite a new concept to consumers back then. So I would say that 2010, 2011, 2012, 2013, even 2014 was really the global expansion phase. They were compared very commonly with Zara, in which they were neck and neck in a neck and neck race to see who would be the dominant player. And it was a period of time where profits were actually skyrocketing, revenues were growing strongly, they were opening up new stores in areas that they had never been before, and when market penetration was very low. And this really contributed to its operating history. You can see revenue going from 108 billion Swedish kroners to 180 billion kroners in 2015. You can see net income going up nicely from 2011 to 2014. You can see net income margins, however, actually coming under pressure, especially till 2015. And the reason why I highlight in red 2015 was because this was the part of time where the expansion plan started to stagnate and hit a roadblock. But you can see they actually had a very nice runway from 2011 to 2014 onwards. Now, the result of this was that H&M was rewarded. It was a growth stock in a way. The story was very strong. They were rewarded with a high PE, a high earning multiple, and combined with increased earnings, right? This led to a dramatic increase in price over the last few years from 2011 up the way up to 2015, somewhere around March. Now, the intrinsic problem with growth stories, especially if you're paying a very high multiple, let's say paying 25 or 30 times PE, is that inevitably good times do not last forever. What was once an unsaturated market will soon become saturated, especially as new entrants start to come in, or as your own brand starts to stagnate and reach maturity. And unfortunately, H&M was facing a host of different challenges. You had new entrants of e-commerce players like Zalora. You had the growth of other fast fashion outlets, Uniqlo. And there was starting to be signs of perceptions of price-quality mismatch, in that people felt that the prices that they're paying weren't sufficiently justifying the quality of goods they're getting. And this is really also, in a way, an increase in consumer expectations. You're coming from a position where people used to have expensive clothing that wasn't of very good quality. Now they're getting reasonably priced clothing of reasonable quality, and they start to demand more and more. That is the intrinsic problem of retailing. And of course, high profit margins also attract competitors because they see that you're doing very well in this segment. They decide we need to muscle in because we can also see the potential profits to be made. Now, helping this point of good times not lasting forever, the intense competition and the pressures that H&M face resulted in a strong depression of its net income margins. You can see that revenue did actually continue to rise even in 2015, 2016, 2017 onwards, but your net income started to trend downwards as the margins started to decrease. You can see that net income margins went from a high, I would say average of 13 to 14% in the expansionary phase when times were good, but as time went on from 2015 to 2018 onwards, you can see that margins start to fall dramatically, and you can see that while revenues have increased, your net income hasn't really moved up, and in fact it's on a downward trend. The result of this is that retailing is a very tough business to be in. There's intense new competition from new players such as Uniqlo, and also, as I said, consumers are getting a lot more demanding. Now, in the article on the Asia Report, I actually give 1 or 2 links to different articles and different theories as to why H&M is not doing as well as it used to be. One written by South China Morning Post, which I thought was quite insightful, which I highly recommend you go and read if you want to find out more. But suffice to say, the financials of the company were suffering. Now, the result of this is really that the share price started to decline dramatically. Because imagine this, you're paying for a company which you think is growing, you think its EPS is growing, you're willing to attach a high earnings multiple. Let's say you attach a 30 times multiple. But now let's say the earnings start to slow down, the earnings growth starts to slow down, or worse, earnings start to drop. Maybe instead of earning $1, you earn 95 cents. However, the market is now worried you're no longer a growth story. It rewards you with 15 times multiple instead of a 30 times multiple. So you have a situation where both your earnings have dropped and your earnings multiple has decreased, and the result is a dramatic fall in price and expectations mismatch. And you can see in this case, H&M peaked around the price of about 350 kroners and has fallen to a price of 120 plus kroners today, which is quite incredible for a brand which a lot of people recognize. I realize it's not a company that a lot of people follow just because it's based out of Sweden. But so I guess always, I think, a cautionary story of the problem of overpaying for growth, especially if you don't have a rock solid thesis, and also the problem of being a consumer facing brand. It's very, very hard to establish a true competitive moat, a true competitive advantage that prevents other brands from coming in and trying to muss in the same segment. And that's a very, very big challenge for retailing brands. And that's why it's also very rare to see fast retailing brands actually dominate for a very, very long time. There are plenty of brands which used to be very popular, which are no longer popular. And once you lose that cool factor, it's always extremely hard to get back. Which brings me to my third point. Does H&M represent a great buying opportunity? Now, once upon a time, Uniqlo actually faced a similar problem. They were facing intense competition. The financials were not looking good. They went from being a growth story to something that people were very concerned about because the growth had evaporated. Margins were under pressure, your net income was down, and the share price essentially halved. Since then, Uniqlo has actually rebounded, doubled from its low. Its expansion plan and its turnaround plan has taken hold. And one advantage it has compared to H&M is that it still has a much longer runway in terms of expansionary works that it can do, simply because it's not as saturated yet as H&M. Now, I think the thing though is that with H&M, you have to ask yourself, I apologize for that. You have to ask yourself what you think of the brand and what you think of the brand going into the future. And I'm sad to say that retailing is not something that comes easy to value investors. Warren Buffett is always famous for saying that, I hate retail. I don't like it. He spent a couple of $1 billion using Berkshire stock to buy a retailing company that essentially went to zero. The brand value, the brand equity evaporated. And I find with retailing in particular, once you find that the brand value diminishes and you're not actually aware of what's happening on the ground, you're only looking at the financials, it's very, very hard for the company to regain its earnings power. I think some people are very, very good at analyzing retail. I'm not one of them, and this is not a company which I particularly like. Now, in the article that I write, I also talk a little bit more about the financials. I think that also concerns about the financial position of the company. Its dividend, I feel, is under threat simply because its free cash flow generation will no longer be enough to pay for its dividend. It's starting to eat in its cash reserves. You see debt levels starting to rise as they need to fund internal operations. And I think if H&M wants to do a turnaround, it's going to have to embark on a costly capex expansionary plan around all its stores around the world, and that's not going to be easy. So with that, this is a very, very short episode. It's really one of our first case studies where we really want to just talk about H&M and companies in general. I talk a lot more about it in the article, especially the financials of the business, and I highly recommend you check it out. If any questions, always feel free to email me at jen@theasiareport.com.